In this video, you will learn exactly how order blocks work, using a real chart, clear examples, and smart money logic. We are using Euro-USD on the 15-minute time frame. Every concept you see here can be applied to any chart, any market, and any time frame. Remember that the principles of market structure and liquidity are universal, so whether you're trading Forex, crypto, or stocks, this logic holds true. Let's dive right into the chart and begin with the most critical first step. Smart money always begins with liquidity. Think of it as fuel for the market. They hunt for stop-loss orders that are clustered above recent highs and below recent lows. Here on our chart, we can clearly mark the buy-side liquidity resting just above this double-top formation. This is where traders who are short have placed their stop-losses. Conversely, down here, we have sell-side liquidity below this low. This area is packed with stop-losses from traders who are long, and it also represents a level where breakout sellers might place their orders. These liquidity zones are essentially magnets for price, showing us where the market will likely attack next to facilitate large institutional orders. Now, let's watch what happens. See how price aggressively spikes above those previous highs. This isn't your average retail buying pressure. This is a classic liquidity grab, also known as a stop hunt or a Judas swing. Institutional algorithms are engineered to push price into these zones to trigger all the buy-stop orders. This sudden influx of buying provides the necessary liquidity for them to enter their massive short positions at a favorable price. They are selling to the buyers who are being forced into the market. It's a calculated move designed to trap uninformed traders before the real move begins. Once you can spot these grabs, you're already one step ahead. Right after that powerful liquidity grab, our attention shifts to identifying the order block. We need to find the last bullish candle right before the impulsive, aggressive drop. This specific candle right here is our bearish order block. Why this one? Because this is the exact price level where institutions absorbed all the buying pressure from the stop hunt and began deploying their massive sell orders. They disguised their selling within this final push-up. The order block, therefore, represents a significant footprint of institutional activity. Zone of immense supply that we will be very interested in later on. It's the origin of the smart money move. Now we see clear displacement. This is not a slow, grinding move down. It's a powerful, energetic push to the downside with large, strong bearish candles. This shows a clear shift in momentum and proves that institutional force is behind this move. And just as importantly, we now get a break of structure, or boss. Price has decisively broken below this previous swing low, which confirms that the market's intention has shifted from bullish to bearish. The combination of a liquidity grab, an order block, and a break of structure is the holy trinity of smart money concepts. It signals that sellers are now in firm control. Smart money almost never chases price. Instead, they wait for the price to come back to them. And that's exactly what we see happening here. Price slowly and correctively pulls back to mitigate the order block. Mitigation simply means the market is returning to an area of institutional interest to fill any leftover or unfilled sell orders that were placed inside that block. This retracement is a golden opportunity. It's the market giving us a second chance to enter at a premium price, just like the institutions did. This is where smart, patient traders prepare themselves for a high-probability, low-risk entry. We don't jump in randomly. We wait for the price to test our predefined zone of interest. We never ever enter blindly just because price touches our order block. We need to zoom in and look for confirmation. For this, we can drop down to a lower time frame like the 5-minute or the 1-minute chart. On this lower time frame, we wait for a smaller internal break of structure to the downside. See this? Price pushes up into our 15-minute order block, and then on the 1-minute chart, it fails to make a new high and breaks a minor low. This creates a tiny bearish order block on the smaller scale. Using this confirmation model does two things. It drastically increases the probability of the trade working out, and it allows for a much tighter stop loss, which significantly improves our risk-to-reward ratio. This is how you refine your entries with surgical precision. Now, let's add another layer of confluence to make our setup even more powerful. Strong, high-probability order blocks are often accompanied by a fair value gap, or FVG. A fair value gap is a 3-candle formation that represents an inefficiency or an imbalance in the market. It's a gap left behind during a very fast and aggressive move. You can see one right here, next to our order block. When you have an order block which shows where institutions place their orders, directly aligned with a fair value gap, which shows an imbalance they created, the setup becomes extremely potent. The market will often seek to rebalance the FVG and mitigate the order block at the same time, making this zone a super high probability area for a reversal. And here it is, the moment of truth. Watch closely as price taps perfectly into our confirmed order block zone. It respects the level, finds heavy selling pressure, and then rejects it with speed and conviction. The downward move is immediate and powerful. This clean, fast, and decisive reaction is the ultimate confirmation that we have correctly identified an area of institutional selling. The price action is not choppy or hesitant. It's a clear and direct move away from the zone. This is the footprint of smart money in action. This is the type of price action we want to see after we enter a trade, confirming our analysis was correct and the big players are on our side. So, how do we manage this trade? It's simple and logical. Our stop loss is always placed just above the high of the order block. This is the logical point of invalidation. If the price breaks above it, our entire trade idea is wrong. For our take-profit targets, we look for the next major pool of liquidity. In this case, our primary target is the sell-side liquidity resting below the major low we identified at the very beginning. By setting our stop loss and take-profit levels this way, we can create incredible risk-to-reward setups. It's not uncommon to achieve a 1-to-3, a 1-to-4, or sometimes even a 1-to-5 risk-to-reward ratio, meaning you risk $1 to potentially make 5. This is the key to long-term profitability. So let's zoom out and review why this entire sequence works so reliably. It's not magic, it's pure smart money logic. First, institutions engineered a liquidity grab to fuel their positions. Second, this action created a clear order block, their footprint. Third, they showed their hand with strong displacement, resulting in a break of market structure. Fourth, the price pulled back to mitigate their leftover orders inside the order block, giving us a chance to join the move. And finally, after confirmation, the price continued the new institutional trend, heading straight for the next pool of liquidity. Each step is a logical piece of a much larger puzzle. When you understand this narrative, you stop trading against the institutions and start trading in harmony with them. To quickly summarize, to truly master trading with order blocks, you need to build a complete narrative. Start with liquidity, know where the market is likely headed. Then, identify the order block that is formed after a liquidity grab. Look for displacement and a clear break of structure to confirm institutional intent. Patiently wait for the price to retest or mitigate that order block. Always seek confirmation on a lower time frame before entering. And finally, set your take-profit targets at the next obvious liquidity level. When all these essential elements align, you are no longer just guessing. You are trading with the same logic that the institutions use to move the market. Thank you so much for watching. I hope this detailed breakdown helps you see the charts in a new light. If you found this video valuable, please give it a like and subscribe for more smart money content. See you in the next one.